Hi friends, welcome to weekly trading trends from Traders Hut. I am Raju Angadi Vishwanth here, a SEBi registered research analyst, certified financial technician with more than a decade of experience in trading and researching in financial markets. Come, let us have a sneak into the weekly trading trends for the fourth week of December 2020 in the equities as well as commodities. Let us start with a brief recap. Nifty gained some 240 points, closed on a positive terrain around 13,760 zones for the week at all-time highs. While the Bank Nifty gained modestly 110 points, closed around 30,700 zones. Bank Nifty underperformed the Nifty, while the Pharma, Reality and IT gained outperformed the Nifty, with mid and small caps gaining marginally, while the other indices like infra, energy, metals were subdued. That's a brief recap on the equities. Coming to the commodities, gold gained around almost 2%, while the silver gained whopping 6.55%, outperformed the gold. Both the precious metals closed on a positive note for the week. Crude also gained 150 points, closed on a positive terrain for the week. That's a brief recap of the how last week paired, week 3rd of December 2020. Now let us have a sneak into the equities weekly trends. Starting with the Nifty gained 243 points, 1.83%, formed a mild bullish candle on weekly charts. With the call side open interest, OI base is built around on a weekly options data around 13,800 to 14,000 zones, where we might face a hurdle. While the put side we are seeing 13,700, below 13,500 zones can be seen. So broadly we can say 13,400 to 14,000 can be the range for the week. Bank Nifty gained 110 points, 0.36%, formed a doji kind of a candlestick pattern. Indecisiveness is still there, and the OI base is built in on the call side is built between 31,000, 31,500 and 32,000 zones. 31,000 is a major hurdle. Above that, 32,000 levels can be seen as per the open interest data. With the put side, we are seeing 30,500 and 30,000 zones, which can act as a support base for the Bank Nifty as per the open interest data on the weekly trends. VIX lost 0.89%, closed around 18.62, formed a long-legged hammer kind on a weekly charts. The stable markets still kept the VIX at lows. So that's a brief on equities weekly trends. Now let us have a sneak into the forthcoming week's weekly trends with the chartical analysis for the Nifty and Bank Nifty, as we had reduced the open interest base. Now starting with the charts. On a daily chart, Nifty has shown a hanging man kind of a candlestick pattern on the last day of the trading session of the previous week. The upside resistance zones can be 13,800, 13,820 and 13,844, which could act as a stiff resistance zones. Once crossed, we can see 13,974 levels for the Nifty, while on the downside 13,712 could act as a support. Below that, 13,690 is a short term support, and the major breakout level which we are seeing for in the short term is 13,580 to 620. 13,580 to 620, which has broken out now, would act as a support. If broken, we can see 13,400 zones. While that becomes a threshold for the Nifty, watch out the levels until 13,580 to 620 is held on. One can buy the dips, but also contrarily 13,820 to 840, if it is not crossed, one can sell the rises. So it can be a objective trading week where the range can be established. Markets have been overheated up. still we can stretch in next couple of weeks towards 14,000 zones. There can be some consolidation and stock specific action going ahead. So that's a brief on the Nifty chartical analysis with the OI data. Now let us come to the Bank Nifty. Bank Nifty is facing a stiff hurdle near 30,900 to 31,000 zones. If broken, 31,567 and 32,000 can be seen. And positionally, if 31,000 on closing basis breaks and 31,567 breaks, we can see 33,400 zones in the Bank Nifty. While on the downside, Bank Nifty is having a strong support near 30,350 to 30,200 zones, which is a short term immediate support. 30,350 and 200 zones have been holding on, while the major support is placed around 29,800 to 29,600 zones, which becomes a key reversal point. And in a worst case scenario, we can see 28,900 zones in the Bank Nifty as per the charts, what the data hint. So as of now, 30,200 to 30,350 holds. It would be a buy on dips, and upside 30,900 to 31,000 becomes a major resistance. So 30,300 to 30,900 is a short term range with 100 to 200 points buffer. Once either way range breakout, we can see 1,000 points move in the Bank Nifty. So that's about the Bank Nifty analysis with the charts and the OI data. Now let us have a stock watch. Stock specifically Axis Bank around 580 to 600 zones is holding up. That is one stock where one can buy the dips. Where also some momentum is seen in Bajaj Auto, which can hit the fresh highs and test 3,500 zones going ahead, with Dr. Reddy inching higher. 5,500, 5,600 can be seen. 5,100 becomes a good base for the Dr. Reddy. As of now, DV slab has broken out of the all-time highs. The momentum can continue towards 4,000 zones. 3,600 become a support, while Cipla 770 to 760 becomes a good support on the upside. And 800, 810 breaks, we can see 900 zones positionally. Infosys and Wipro crossing 368, 372 levels can take towards 400 zones. Infi has broken out of all-time high. 1260 to 1300 levels can be seen in the stock. Naukri also can test 5,000 zones where some long build-up is seen. So some profit booking is seen in metals and financials. So be objective and selective while selecting the stocks. As we are in a overrated, either way momentum is seen in the stocks. Now shift corrections also are witnessed after a stellar rally, so it would be a buy on dips market. As of now, the trend is not completely reversed. We are facing the hurdles, so watch the levels, and stock specific action is expected to continue. So that's a brief on the equities trade setups for the forthcoming week. There is a brief ad before getting into the commodities trade setups. If you would like to become a master day trader and get the elite trading tips from the SEBi registered research analyst, join our traders at community. Visit tradingview.today and get your free trial activated for a week. Learn, earn, and prosper with Traders Hut. So visit tradingview.today and activate your trial. And if you would like to learn the trading and trade on your own, grab your first free video on tradersat.com/opt-in as shown in the link below and start your journey to become a master trader. That's about the brief ad. Coming to the commodities weekly trends, gold gained almost 1,000 points, 980 points. We are in a bullish terrain, just closed above 50,200 after quite a long time, formed a bullish candle on weekly charts. Silver gained 4,170 points or 6.55%, formed a bullish candle on weekly charts, closing just around 67,900, almost just below 68,000 zones. The trend on the precious metals is expected to continue on the upside, while the crude gained 157 points or 4.57%, formed a bullish momentum candle on the weekly charts around 3600 zones. So that's brief on commodities weekly trends. Now let us have a chartical analysis and deduce the trends or the trade setups for the forthcoming weeks in the commodities. Starting with the gold, we are seeing a 4-hour chart of the gold where we are having a pictorial analysis. Gold 50,200 to 300, if decisively crossed, we can see e 51,000 51,300 levels positionally. So the momentum is expected to be positive, and the support zones for the gold for the immediate short term is 49,800 to 49,700 zones. Once below that 49,500 and 49,200 levels becomes a major reversal points. So 49,200 is the Lakshman Rekha on the downside, and on the upside we can see 51,000 51,500 levels on the gold. And coming to the silver, the important supports to watch out for the short term are 67,500 and 67,000 levels. So watch the levels accordingly. The trend remains to be positive, and above 68,000 we can see 70 to 71,000 in the silver, or 72,000 levels can be seen. 67,000 becomes an important support for the short term, and if it is broken, 66,600 to 66,300 becomes a major reversal point as of now for the silver. So trend remains to be clearly positive as we are seeing a strong momentum on the upward bias. While coming to the crude oil, the momentum is positive until 3,450 E460 levels is held on positionally, and short term supports are placed around 3,540 and 3,500 zones. On so upside, mm, crude oil can visit 3,700, which we are giving a minimum, which we have been giving a minimum price objective from the past few weeks. 3,700 above 3,850 to 880 levels can be the major hurdle for the crude oil, as the sloping trend line resistance also comes around those zones. So watch the levels accordingly and establish the trade setups with the trading clusters discussed, and trade objectively as we are in a high momentum markets. So that's about the forthcoming week's trade setups for the commodities, and also on the TradeQuest weekly trading trends from TraderSet. If you like the video, please subscribe to our YouTube channel. Also share our video with the weekly analytics. Will come up with the more analysis and the more research to help you out. Join us on our Elite Trading community in Facebook, TraderSet, and also on a Twitter handle, TraderSet, to get the research ideas and to learn, earn, and prosper. Thank you, everyone. Have a happy and prosperous trading week ahead.